I'd be lying if I said I was surprised, so I won't say I'm surprised. Arcimoto shuts down factory. Stock plunges as it warns of bankruptcy. We'll check out the stock in just a moment. Make sure you're sitting down for that. I think it's safe to say that the majority of investors who purchased Arcimoto stock haven't exactly seen a great return on their investment. However, I think it is safe to say that the vast majority of people who've joined Patreon have seen a great return on their investment. That's why you guys and girls are sticking around. If you're not a member, you can join with the card in the corner or the link in the pinned comment. To put things in context, as I record this, you could probably buy about 4 shares in Arcimoto or 1 month membership on Patreon. I know where I'd be investing my money. Electric vehicle maker Arcimoto announced on Wednesday it had shut down production at its factory in Oregon, saying that they are nearly out of money. Turns out, production is hard. Who'd have thought? To help try and keep them afloat, the company said in a regulatory filing it was moving to sell additional shares and that they may have to enter bankruptcy protection. You guys know how this one ends, right? According to the regulatory filing, Arcimoto is selling $12 million in additional shares at $3 each, a figure that was less than half the company's trading value at the close of markets on Tuesday. The company added, however, that it would still need substantial additional funding, warning that it may not be available, quote, on acceptable terms. As a result, the stock plunged more than 50% and is currently hovering around $2.50 per share. Quote, "We have halted our production of vehicles and will require substantial additional funding to resume production, which may not be available to us on acceptable terms or at all. And if not so available, we will be required to cease our operations and or seek bankruptcy protection." By the way, ladies and gentlemen, in the coming months, quarters and years, you're going to get a strong sense of deja vu as many other EV makers have the exact same statements. Oops, running out of money, need to raise more capital, selling shares really cheap, diluting shareholders, we're kind of probably going bankrupt, rip. Arcimoto makes a 3-wheel electric vehicle it calls the Fun Utility Vehicle at its facility in Eugene, Oregon, which opened early last year in the midst of the pandemic. Due to its limited mass market appeal, the company has struggled to increase sales, delivering just 115 FUVs to customers over the last 6 months and making only 252 during that same time period. The company attempted to expand the market for the FUV to first responders, creating a prototype of rapid responder that was intended for use by police, fire departments, campus security teams, and others. It also created the Deliverator, aimed at last and local mile deliveries. Arcimoto recently, and this is madness. Arcimoto recently had a valuation of more than $1 billion. After Wednesday's announcement, that value has plunged to around $6.5 million. And if you guys want to nerd it out, you can read the full regulatory filing here. The short story, we're kind of fucked, we're issuing new stock, might not end well. So before we get any further, I just want to say 1, this is a shame, and 2, this is also unsurprising. The few times I have mentioned Arcimoto in the past, and there was a time when every one of you fuckers was asking me in the comments, "Hey man, what do you think of Arcimoto?" My thoughts were, cool product, they'll probably go bankrupt, I wish them well. And here we are. As we see here, Arcimoto's stock down today almost 60%. However, to put this in context, over the last 5 days in the run-up to this announcement, Arcimoto stock actually up almost 70% before plunging. Now for some reason, something about a bell curve is kind of coming to mind. This stock chart looks kind of familiar. It sort of reminds me of the Fraudstown Motors stock and also the Nikola Motors stock. Let's do a comparison of these stocks. Interesting. So, we have here Arcimoto in the dark blue, Fraudstown Motors in yellow, and Nikola Corporation in cyan. Call me crazy. You'd probably be right, but I think I'm noticing something here. The first stock to go literally fucking to the moon, and I ruthlessly mocked, ridiculed, and absolutely roasted every dumb motherfucker buying Nikola stock relentlessly on this channel. Are you fucking stupid? The guy's a fraud, this company's full of shit, they'll probably go bankrupt, CEOs saying things that run counter to reality, literally defying the laws of physics, obviously full of shit. That pickup truck's gonna be a fake truck just to pump the stock. This guy's job is to pump the stock, and guess what? A bunch of dumb motherfuckers fell for it. Why? I missed out on Tesla, better buy the next Tesla, ha ha ha. Hopefully they learned a lesson, but I'm not sure everybody did. Next minute, after Nikola stock plunges back to reality after the allegations of fraud, misleading statements, and Trevor Milty getting kicked the fuck out of the company. P.S. Trevor, what a fucking idiot. Next minute, Fraudstown Motors goes vertical out of absolutely nowhere. And guess what? Yep, that's right. They get exposed for fraudulent pre-orders. Pumping the stock, next minute stock crashes, and then out of nowhere, guess what happens? Arcimoto to the fucking moon. Now, I'm not here to shit on Arcimoto, nor Fraudstown Motors, nor Nikola. Although Fraudstown and Nikola do deserve to be shat on repeatedly for the fraudulent statements, misleading investors, clearly attempting to pump their stock price, preying on one end of the bell curve. But I just need to point out the absurdity of what happened with the Arcimoto stock price. We've seen 3 examples of brain damage in the stock market. 3 companies whose valuation made no sense, rocketed to the moon, then 2 get exposed for fraud, misleading statements, etc., and 1 just can't get to production without going bankrupt. The stock's obviously coming back to reality. I believe that most investors saw Tesla rocket to the moon. Remember, this was the same time that Tesla literally went vertical. In fact, let's add Tesla just to compare. Notice, Tesla in orange here started rocketing up and up and up and up and up. Almost the same time Tesla's going vertical. What's happening to Arcimoto? The same thing. Disturbingly, Arcimoto's stock tracking quite closely to Tesla during most of this period in the run-up from mid-2020 all the way until early 2021, and then crashing back down to reality before Tesla and Arcimoto start to diverge around August 2021. Prior to August 2021, I think the reason for most of the stock price gains in Arcimoto, Fraudstown and Nikola was people thinking, oh, I missed out on the gains in Tesla. What's the next Tesla? Whatever company says they're the next Tesla, I'm going to buy their stock instead because I'm very smart. It didn't end well. May this be a lesson to the dumb motherfuckers. I just want to underscore that. Dumb motherfuckers who were thinking like that. Oh, I missed out on the gains in Tesla, therefore, what's the next Tesla? Now, there's nothing wrong with trying to find opportunities, but there is something wrong with assuming, hey, I've missed out on all the potential in Tesla. Therefore, there's obviously another company who's got equivalent risk reward, but a much cheaper stock price. I'll just buy that instead. Can't possibly go wrong. And I don't mean to rub it in, but I do just want to show Arcimoto's stock price today, $2.48 per share. It had a peak closing price of $637. The bell curve on one stock chart. I mean, need I say more? Now, from that peak closing price, Arcimoto's stock is officially down 99.61%. It's a similar story with Fraudstown Motors. From its peak closing price of $29 per share, today it's at $1.14, peak to trough decline of 96.07%. And of course, there's Nikola stock, the ultimate example of the bell curve being real. From a peak closing price of over $65 down today to $2.47 per share, a decline of 96.25%. I mean, really, who could possibly have seen this coming? Answer, anyone with eyes. Now, in case you haven't figured this out yet, reaching volume production on electric vehicles or any complicated manufactured product is very difficult. EVs in particular, because there is already an industry leader who has reached enormous scale, making compelling electric vehicles that consumers cannot get enough of, and extremely profitable. Tesla, they have an unassailable lead. Nobody will catch Tesla on features, functionality, and the overall value proposition. Don't get me wrong, over time, companies can reduce their costs, improve their technology, get better performance, and so on. But Tesla ain't standing still. They already have a multi-year lead. So every other company attempting to make EVs, or FUVs, or whatever the f else you want to call them, is at best hoping they can grab a tiny slice of the market in which Tesla is not already dominating, a very niche product, super high-end, ultra-luxury, three-wheel vehicles, and so on. Most of these companies attempting to compete with Tesla, and this includes legacy automotive manufacturers, aren't going to make it. Companies like Rivian and Lucid are high on the list of future bankruptcies. Now, don't get me wrong, both companies have compelling products. Rivian in particular got a great product and a decently sized total addressable market. But a cool product, great technology, doesn't mean shit. The hard part is profitably scaling to volume production without going bankrupt in the process. And most companies will not be able to successfully do this. There's going to be a huge consolidation in the automotive industry in the next few years and throughout this decade. There will be mergers, there will be acquisitions, there will be partnerships, sharing of technology, and then ultimately filing after filing, bankruptcy after bankruptcy. Oops, you ran out of money. Oops. It's going to keep happening. General Motors will not make it. Toyota will not make it. Volkswagen probably will make it. Ford have a pretty good chance as well. I suspect Volvo/Polestar will do very well. Definitely a quiet achiever, flying under the radar. But starting a new EV company or transitioning a legacy automotive company to pure EV production is a multi-billion/multi-deca-billion dollar investment and will take many years. While that's happening, Tesla continues to pull further into the lead. Now, I'm not here to shit on investors. You guys and girls are welcome to make whatever decisions you want. That being said, it must be acknowledged that everyone who did invest in Arcimoto stock, Rivian stock, Lucid stock, Fraudstown Motors, Nikola, etc. was gambling. Assuming they'd done any thinking, they would have concluded very high probability of bankruptcy, but the tiny possibility they make it could be a huge return. I'm willing to take this risk. I'll make this bet. Most of these bets will not pan out. A couple of them might. It's important to understand this mindset. If you're investing in a new EV startup or a legacy automotive manufacturer who's transitioning to EVs and you're not expecting a high probability, as in greater than 50% probability, probably greater than 80% probability of them going bankrupt, you're doing it wrong. Compounding the likelihood of most of these companies going bankrupt as they attempt to compete with Tesla to transition to EVs is the current economic environment globally. We're entering a recessionary environment. The tide will go out and we'll discover who's swimming naked. This is literally the worst time in the last decade and a half to be in the automotive business, electric or otherwise. My prediction is that we will see a massive consolidation in the automotive industry in the coming years, one after another. EV startups and legacy automotive manufacturers will start running out of money. The ICE vehicle manufacturers will see ICE sales collapse at a rate many times faster than they could ever have expected. They won't have the EV volume to actually fill the gap, and even if they did, they're still not making any money on these EVs. So they lose the only vehicles they're selling for profit, ICE vehicles. Those sales collapse way faster than they anticipate, and they still don't make any money on their EVs as they attempt to ramp up production. This is a double whammy. Legacy automotive manufacturers are going to get absolutely fucking spit roasted. On one end, you got ICE sales collapsing, and on the other, bleeding money trying to transition to EVs. Does not end well. EV startups, similar story. Except they can't rely on their ICE vehicle sales for the next few years to make any additional profits. They need to raise insane amounts of capital and bleed many billions of dollars every year to hopefully eventually become cash flow positive. Hope, of course, is not a strategy. And one very, very important point to underscore once again, having a cool product is great, but it tells you nothing about the probability of a company being successful. Nothing, as we've heard a million times. Prototypes are easy, production is hard, as Arcimoto have recently discovered. Now, I hope they can somehow pull off a miracle and survive here, but it ain't looking good, ladies and gentlemen. So, rest in peace, Arcimoto. It was good while it lasted. And just finally, my condolences to any Arcimoto bag hodlers. Let me know in the comments below, why did you buy the stock? What was your thesis? Did you know this was high risk? Did you expect high probability of bankruptcy? Were you just trying to find the next Tesla? Or was there another reason you bought the stock? And remember, automotive manufacturers will be dropping like flies in the coming years and throughout this decade. Don't say I didn't warn you. And if you'd like more content, head over to Patreon. More than 275 exclusive videos, plus my Tesla price targets, and plus optional access to my Tesla valuation model. So, see you over on Patreon. Love ya.